Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 30th of July. Now this week we've got quite a bit of fundamental data coming out which could create some reasonable volatility in the markets. We've got the Bank of Japan monetary policy update, we've got the US Fed interest rate decision on Wednesday, and we've got the Great British Pound Bank of England interest rate on Thursday. And on top of that we've got the the non-farm payroll news on Friday. So there is quite a bit of big juicy news for the markets to get its teeth into. So let's come and take a look at the markets that we took a look at last week on the Markets to Watch newsletter, and some of the markets that we're going to be taking our focus on this week. So the first one was oil. Now we were looking at last week, if I open this up, last week we were looking for a small bounce here on the in the sort of moving average zone here on the weekly chart. We were looking for this sort of small candle to sort of form. In fact, we were looking for continued long prices here. Now at the moment, or last week, we pretty much oil traded in a narrow range, and we didn't really get that sort of continuation and follow through. If I zoom out a little bit, you can see the context of this. However, this created a small bullish candle here, and now this week the market is starting to raise up and it's starting to break the high, or it's looking like it's going to break the high of this small bullish candle. So this sort of gives us a nice structure here. We could be looking for a continuation of this trend, and if we get a break above the high of this of the last week's candle, we'll certainly be looking for long opportunities above price on oil, at least up to the old highs, for this weekly trend to continue. If we come down the time frames, you can start to see here that on the 8-hour chart, the trend structure is starting to look much nicer here. Nice clear series of higher highs, higher lows. Again, on the lower time frames here on the 4-hour, trend structure now starting to make much more sense. Now, last week's high was up here around the sort of 69 sort of 50 area. 69 sort of 75 area, which is around this sort of dotted line. The market's now sort of rallying up to that. What I'm looking for is opportunities once the market breaks this high. If it does that, we then could be looking for a sort of continuation of the trend to the long side. So entries that we'll be looking for will be much more on the sort of mid time frames here as opposed to the weekly. We also looked last week, we looked at the dollar yen. Now, from a dollar yen, from a swing perspective, we were looking at this here on the weekly to see whether the market was going to find support here around this sort of 111 level. In fact, the market did sort of break underneath 111 for most of the week, and we were in actual fact looking for sort of positions short to sort of nibble into a move to the short side. That didn't really materialize, and now we're in a fresh week and the market is now sort of establishing sort of support here around 111. With the dollar and the yen news that's due out this week, it's something that I'm not looking sort of for positions in, certainly sort of swing positions on this sort of currency pair this week. Now, the last one that we looked at last week was the NQs, was the Nasdaq. If I open up the daily, what we were looking for here last week was we were looking for the market to sort of pull back, find support around the 73 level, and for the trend to continue. Well, in fact, the market did that pretty much exactly. It pulled back, bounced off 73, and then rallied up to make a new high. So that was all looking good, but then we had the disappointing numbers from Facebook and the disappointing numbers from Twitter, and the market just couldn't hold that, and the market's now sort of retraced. It's fallen back into these sort of support structures here, 7,300 and 7,250. So it's finding at the support around there at this moment in time, and I suppose the question is the market going to is this going to be considered a buying opportunity, or are we now going to get a fundamental change and the indexes are going to roll over? Certainly from a weekly perspective and a monthly perspective, these uptrends are still intact, and we've just taken out some of the heat of these extensions. So this week, the markets that I'm going to be sort of focusing on, or some of the markets that we'll be focusing on from a swing perspective, will be oil. We're going to keep a close eye on that one. And also, we're going to come and have a look at some of these indexes. Now, the market of choice is not going to be the NASDAQ, but it will be some of these others. If we take a look at the S&Ps, the S&Ps still looking extremely bullish here above 2800. So very, very nice sort of structure here. If I open up the daily chart here, the market's just pulled back into the moving averages. We've got a sort of rather bullish, small bullish looking candle at the moment here on the daily chart. Even on the 8-hour chart here, we can see that the market's now sort of pulled back into key support. My preferred one out of the three is the mini Dow. So this is the Dow Jones, and the reason is that, again, from the macro perspective here, the trend still looks long. Monthly trend still looks long. If we come down to the weekly, this one hasn't broken out of its structure level yet, so it's still contained underneath the 2550 level. So a break above 2550, there could be quite a bit of momentum to kick in after this level, after the market breaks this level, and then that could propel us towards new highs. So I rather like this one to the long side, above 2550. If we come and have a look at the daily is just sort of testing that area at the moment, but the trend structure is still definitely long here. So we could get a bit of a retracement here back into the moving averages to build up some momentum to break through later through this week. Even if we start to come down to the mid time frames at the moment, we can see that there is sort of small bullish candles, that the 8-hour and the 4-hour is back into that moving average zone. We have optimal chart structure on these time frames. It could be some interesting sort of areas around here to start to nibble in on these markets if we're looking for long opportunities on the indices. Now, as far as currency markets are concerned for this week, I'm going to try and stay away from some of the big markets where the news could affect it. Now, of course, the amount of news that we've got could affect all markets, but this one here is rather interesting to me. This is CAD Swiss, and if I open this up, I'll show you the reason why. So if we take a look at CAD Swiss on the weekly chart, the market's just sort of been coming up. It's testing this level here that the market has found key support and resistance at many times. I can see here that this trend, there's no sort of real weekly trend here for any long-term plays. But even if we can get a play for throughout the course of the week, a decent weekly move, maybe up towards these old highs, I mark that in there, somewhere around here where we've had key resistance in the past and support in the past, that looks like the next structure point here on this market. So a break above this level, we could be looking for a move at least up to the sort of higher level here around sort of 77.25, and that's really quite a decent move on a play that we get into on an intraday time frame. So if we come down the time frames, you can start to see on the daily chart, we've got sort of trend structure forming here, and the market's just sort of breaking through these sort of levels. We've got convergence on the indicators, and again on the mid time frames here, we've got starting to get the moving averages starting to open up and trend structure starting to form. So again, I'm looking at a possible play here on CAD Swiss above that sort of 76 sort of 25 level there that we can see on the weekly chart. So there's a few markets that we're keeping an eye on from a swing perspective in the trading room. I certainly hope it helps, and I look forward to speaking to you next time. Bye for now.